You know, HS Tech, it seems like it wants to rebound, and then it gets stuck in these crosswinds, what we're seeing externally. How big of a factor is that going to be moving forward?
Well, I think right now it's mainly about regulation easing that will lead to some of these stocks bounce back. But then we realize that sometimes these are just rumors. They're not really true. Take the NIPO revival as an example. I think going forward, what really drive some of these stocks would be one, of course, regulation, and the other would be the macro economics. So it would affect advertising, consumption, and then obviously like the COVID restriction, COVID lockdowns that would also drive the stocks in different levels.
So are you saying that the worst may not be over?
Well, I actually think that the worst is over because we see that the government rolled out like 33 different policies to ensure that like even though, yeah, you have some lockdowns, but there are ways to at least protect like supply chain, and then you can like do closed loop production. I think that China in general has sort of learned some like lessons, and I believe the worst is definitely over.
And the earnings pictures, at least when it comes to Alibaba, like happen better than expected as well. How big of a driver are earnings going to be too?
Well, actually, I think when it comes to earnings, I think there's a potential to surprise on the upside because these companies are all talking about reducing focus on growth, but much more focused on profitability. So I think that they will do a lot of cost cutting. They will downsize some non-profitable businesses, and it's possible that we see an upside, I think.
So where do you go to? I mean, you cover across tech. I'm wondering, is it still e-commerce that you look at? Is it live streaming? Is even online education, which people are starting to see, is starting to emerge some value here now? Yeah.
So I mainly cover e-commerce. So then within the e-commerce space, I think in the near term, obviously, I still prefer JD because of the logistics. We know that it's high quality, it's more able to deliver whenever there is lockdown, and then it has like a big supermarket category, which we see that, like let's say in May, we see that it's still up on a year-over-year basis because people are holding some daily necessities.
Yeah. Given that we saw the retail sales print, I mean in May, at least it looked better than expected. Does that change all your views on revenue targets for the likes of JD.com and some of these e-commerce names?
Yeah, actually, looking at the online sales is actually quite good. So for the physical e-commerce sales, we combine April and May together, it's actually up 7%. But then I think that for total retail sales, it's still like declining. So then obviously, I think the e-commerce is doing better. We kind of knew that, I mean, in the after the first quarter results, we kind of knew that the worst is over. So I think at this stage, we're not really changing our numbers. And we also know that like disposable income ultimately is the main driver for like consumption. And then all these like stimulus will take time to roll out. So we kind of sort of expected that it will take time, and we have already factored that into our assumptions.
Okay, so you like JD in the short term. You're saying maybe Alibaba, that stock could actually look a little bit better later on this year. Why so?
Yeah, because first of all, they're cutting costs very aggressively, I think, like across all the segments. And also, we are seeing that like they had really heavy loss last December. So that was like a really so after we are over that comp, I think like like next year, like for the March quarter, I think it will be much better.
JD mentioned about getting into food delivery.
Yes.
Do you think that's a smart move?
Well, it's the same reasons why Meituan wants to get into e-commerce, sort of through community group purchase. I'm glad you asked. and then it's like if you are getting into my turf, I'm getting into your turf because otherwise, like I could see my e-commerce businesses somewhat like losing growth or like eroding, right? And then I think more importantly, they have Dada, which is very good in same city delivery. So I think they want to also leverage that. I think possibly they can sort of reduce costs on a per unit basis. If let's say I deliver more than one thing, like food and also drugs and whatnot. So I think but then I think that they are still taking time. They are very carefully assessing. Like the macro isn't great now, and you will probably need more investment in doing so. So I think they would sort of like just investigate and look into it and do it gradually.